All right. Good morning, everybody. Morning, Daniel, Ron, Jim. Good to see you guys. It is, what is today? Today is Wednesday, February 15th. Hope everybody had a good time yesterday. Maybe got some chocolate, steak, whatever. I had both. um, my name's Mark. I'm going to be walking you through the education today. Joel F., nice to see you this morning. Joel, ready to follow some rules today? You killed it yesterday, my friend. Good morning, Zeba. Nice to see you. Guys, I am going to be working today. Good morning, Gary. We're going to talk about rules and we're going to read charts an awful lot. Hey, good morning, CJ. We're going to look at our indicators. We're going to talk about what we see, what you see. And there's really, it's just going to be a conversation for the next 3 hours. This is not a lecture class. This is not a class where you sit on the wall and hope you absorb everything, guys. The more you talk in this classroom, the more you type in, the more questions you ask, the better this class is. True story. It becomes more informative. It becomes more interactive. And really, I think everybody gets more out of it when you ask that question that you're afraid to ask, because everybody's thinking it. Everybody's wondering, right? You're sitting in your room and you're like, gosh, good morning, Safia. You're like, man, I wish you would cover entries. I wish you would just slow down and talk about getting into the market. And you don't say it. And then someone else does, and you're like, oh, thank goodness, right? That happens a lot, guys. So ask all your questions. But before we do that, let's go to forexfactory.com. If you were in front of your computer at 8:30 this morning, oh my gosh, fireworks, right? Good time. Making sure that you're not trading in front of news, that you're not trading in front of an emotional reaction coming from deep pockets that can make the market bump and jump and spike and all those different things. Today we had the core retail sales at 8:30 a.m. I don't know what core retail sales are. I'm assuming they have something to do with the core of the retail sales, but I'm not concerned about what they're saying. I'm just concerned that they're saying it. I don't want to be in the middle of things when news goes off because it's hard to predict. It's patterns change, things spike, the market moves. There's a lot of volatility. And even if the patterns are perfect, sometimes and usually it's too fast to even catch them. So every morning, make sure that you're checking out your news. And then, guys, it's that time of the month. I'm going to go to absolutely. Joel, I've made some amazing pictures for you guys today. That's what I did this morning. I woke up and I worked for you guys. So when we get to the entry section, Joel, I think you're really going to dig what we did. Today is Wednesday the 15th, guys. Tomorrow we're going to roll crude oil. Your NinjaTrader 8 is probably going to give you a little update saying, hey, we're going to roll. And your NinjaTrader 7, we're going to walk through it in class tomorrow. Just want you guys to know that that is coming. And then everything that I talk about is going to come from the education page, guys. I'm going to click right here. The first one is the software user guide. I put a link in the room for you. TechSmith Jing. Guys, show me your hand. Do me a favor. Put a hand up in the room. Use that silly little emoji. And let me know that you're okay taking pictures. Let me know that you're capable, that you know what you're doing, that you're comfortable with it. And if you're not comfortable, I want you to do the same thing. I want you to say, hey, Mark, I'd love a quick tutorial. Because, guys, the most important thing that you can do is post in the room and ask questions. There's the link to TechSmith Jing. It's an absolutely free. Don't worry, Safia. It depends on the market. Is the first answer on that one? So I'm going to give you a link to some study. Sounds good. CJ, are you on demo? It should be there already. Safia, that's for you. And it just talks about the movement within the prices. And that'll help you a lot. No worries. So do me a favor. Do you have software, CJ? Did you talk to a salesman? You're welcome, Sophia. Cool. So guys, let's do that. Awesome. So check it out. CJ, go to your search bar and I want you to type in capture. And when you type in capture, you should see TechSmith capture. If you do, click open. And then that's going to bring up the TechSmith capture software. Oops, and mine's going to give me fits again. Hold on just 1 second. Sorry guys, blacking out for a second. I need to kill my TechSmith capture. And let's see if I can get that thing open real fast. Sometimes it's giving me fits. My Snagit was having some challenges this morning too. So CJ, let me know if you find it. It is a 100% free download. It appears to be having challenges right now. No worries. So follow this link. And let's give you the free version. So that's the TechSmith capture, guys. This is the Jing tool. It used to be called Jing. Now it's capture. You just click free download. And it's super easy. There's a Windows download. It's going to ask you if you want to set it up. Click that setup. And we can do all this live, right? We can make this happen. And then you have to accept, right? Super easy. Hit continue. And it's just going to download TechSmith Capture, guys. And this is how we're going to be able to take pictures. Super easy process. And look at that. Up comes my capture software. What was that? About 2.5 minutes, maybe? So now I have capture software. And the other side of that, and guys, I love this. Awesome, CJ. Then I'll slow down just a second. Let me know when you have it up. Then the second half is, guys, there's your instructions for all of you with partially assembled grills and children's toys. There are instructions how to use it, but we're going to go through it and do it together. Because really the most important thing that you can do, I think, is take pictures. The path to becoming a confident trader ASAP, post your trades in class, and then track them in a real-time performance sheet, spreadsheet. And we're going to do both of those. And it all starts with just opening up the capture software. You can see that I have the S&P market behind us. We're going to talk about what we see here, guys. Look at this. Termination condition up at the top, giving us odds favorable momentum. Oh, it may be setting us up for something. We'll see. We'll see if the rules are met. So once you have the capture software up, I'm going to click capture. If I hover over one of my charts, it's going to take a picture of one of my charts. What you guys want to do so that we have the best conversation is you're going to left click in the upper left hand corner and you're going to drag it all the way down to the right. And when you release, make sure that you have those timestamps in there so that we can line up. I love to see the price. And then I'm going to release that button, that mouse button. And I'm going to capture an image with this camera right here. Once I click capture an image, it gives me an image preview. Everybody good with that? CJ, did you get it up? Awesome. So now we have the picture, guys. This is the beginning of our conversation. And I want you to not only show me when you take a trade, guys, I want you to show me when you have a question, when you see something, when you're curious about something. So I'm going to use the tools up top here, arrows, callouts, and shapes, to just point things out. I may point out termination condition. And you might not know what a termination condition is, so you may use this call out button and go, hey, Mark, is this a termination condition? Awesome, CJ, you are a good student. And you may think that you see an entry, and you might use that call out button and say, is this an entry? And what you're going to do is you're going to progress from is this to, hey, Mark, I see a termination condition. Hey, Mark, I think I see a potential entry. Is this momentum? You know, and you're just going to go through and you're going to do all these little things. Let me know what you see. Let me know what your questions are. Let me know why you took a trade if you took a trade, and maybe why you exited that trade if you were in it. And then we're going to click this blue upload button. Once I click the blue upload button in Capture, it gives me this link to screencast. And CJ, you did it. I'm going to click copy, and it's going to go on my clipboard until I copy something else. So I'm just going to come to the room. If you're in the pop out, it's Control V, otherwise right click and paste. And I'm going to put that picture right in the room. And when I put it in the room, this is how you and I have a conversation. You can also click copy. Oop, not copy. If I go back to editing, I can click copy down here. And then now that capture is copied. And once again, I can just come in and post that picture directly into the room so that we can have that conversation. But it's from the screencast link. A couple really cool things happen, guys. First of all, once you upload it to this cloud, the screencast cloud, if you go to your screencast account, if your fingers aren't drunk, there we go. You go to your screencast account and look at this. You have a picture of every picture that you've ever uploaded to that cloud. You can go through, you can view them, you can share them, you can edit them, you can delete them. All of that from the screencast account. And then that path to becoming a confident trader ASAP is posting your pictures in class, guys. That's the first thing. And then the second thing is you're going to use this spreadsheet. And the spreadsheet, once again, should be already on your computer if you're a brand new user. If you just search Nexgen 90 day, there's a spreadsheet that first page has you tracking everything that you do. Second page has you taking pictures of the perfect entries that we're going to talk about, putting them into your spreadsheet. And we're just going to create a link. So that same link that I posted in the room, I'm going to paste right in here, www screencast letters and numbers. But I want to know what's going on in the picture, guys. It's important that you can go back and study. Maybe you're studying long trades. Maybe you're studying short trades. Maybe you're studying termination conditions. So in the upper left-hand corner, there's an insert button. And I'm going to click this link button. And this is going to let me turn that web address, paste it right into the address bar like you're going to Google or eBay. And it lets me put in a description. So we'll call this one long, rules met, click enter. And now I have that hyperlink right in my spreadsheet. And guys, the goal is that every day you come back and study what you did yesterday to make you a little bit better today. You study the patterns that you saw yesterday to make them easier to catch today. You study the termination conditions that you saw yesterday so that you don't trade into them today. So if you get in that habit from day one, can't stress this enough, get in the habit day one of posting in the room and asking your questions and filling that spreadsheet, guys, it's going to put you in a wonderful position to get you exactly where you need to be. And then the other one is Snagit. Snagit is the paid version of Capture. They work exactly the same, but the difference with Snagit is there's a few extra bells and whistles. You can come through and do a little bit more with it. I'm a big fan of Snagit. That's what I use primarily, but the Capture software is going to get you right where you need to be. So good little lesson there. Practice, guys. Practice taking pictures. CJ, I'm going to look at your picture. Whoop, and you brought me straight to the TechSmith site. Hold on. And then we open up the picture that you had. Cool. So you're taking them, but what I need you to do, are you ready? What I really need you to do, and this is for everybody, left click up top and drag it all the way down to the bottom. I know that was just a tester. And make sure that you give me all the information that you can. Make sure that you're showing me what you see, where you see it, top to bottom. It makes life a lot easier for me, and you're going to get much better feedback out of me like that. All right, so that was talking about TechSmith, guys. Using those pictures, take as many as you can. Have a blast with it. And then we're going to get going here, guys. We talked about news. Sorry, that was 15 minutes. I love it. Love the questions. So let's talk about where everything comes from. Let's talk about what we're going to do today, guys. And that all comes from the tutorials section. No secret handshakes in Nexgen. Everything we do, we discuss 100%. We put out there for you. And guys, this tutorial section is going to cover your first 30 days intensely. Your first 30 days, brand new users, let yourself be new. Brand new users, let it be simple. Old users coming back, looking for some clarity. CJ, that is the exact same picture. So close out that picture and start a new one. Because remember that if I capture and I click the camera, once I upload, this is going to be stuck to my clipboard until I take another one. So I can close it, and then when I take another picture, it'll give me a fresh upload. Guys, I want you guys thinking for 30 days. Keep yourself focused on one simple trade that repeats itself every day. No worries, it's all practice. D, if the system does not come up, does that mean you need to connect to an external data feed before opening your workspace? Absolutely, D, because the market, the software relies on that live data, on the historical data. Good morning. Nice to see you, Mark. So you're going to want to connect, and then once you connect, open up that workspace and it'll have the information that it needs to go through. CJ, perfect. Nice job. So just coming from NinjaTrader, make sure that you come through and you go File, Connect, and get your live, whichever data feed you're using. Once you're green down here, then open up that workspace. It's going to get you where you want to be. Great questions this morning, guys. These are the ones that are perfect for a new day. Absolutely. Guys, I want you focusing on a high probability trade for the first 30 days. I want you to focus on a trade. Let me show you why. Every indicator lines up on every chart, guys. This is your high probability trade. This is a trade that we're going to talk about the rules today. This is a trade that has the potential to win 70 to 80% of the time. That feels good when you win 70 to 80% of the time, right? This is the one where the triggers are their strongest, nothing's in the way, your entries are where the market is likely to continue. And guys, this first trade, this high probability trend trade, is going to teach you the most important skill that you can have as a trader, in my opinion. It's going to teach you to read your charts. It's going to teach you to look at your indicators and understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. And guys, this skill set is 90% of what you're going to do during a day. Reading your indicators, waiting for the advantages, just chart reading. 10% of what you do is going to be actual trading. And that chart reading mastery, like I said, where the market is likely to go, we're gonna use this for targets. Where the market is likely to continue, you're going to be able to use that for entries. And where the market is likely to stop, that's what we call a termination condition. That's going to help you identify when an area has been reached and the market may not progress through. So guys, we're going to go back and forth between the S&P, crude oil. We're going to talk about the rules. We're going to talk about the looks. But let me give you the picture of the rules. Remember, gonna keep it simple. Need you guys to put your right hand up and say, Mark, I promise to keep it simple. I realize that I'm brand new. I'm not going to try and be a brain surgeon on my first day of medical school, guys. We're going to look for 3 rules to be met on 2 charts. And the formula for a trade in the beginning is really simple. It is momentum with a clear path. Thank you, John. And then an entry area. And this is what we're going to focus on today. And you're going to do this on only 2 charts. On the left-hand side of your screen is probably your 13-2 chart. Your 13-2 chart is a big, slow chart. This is the general temperature of the market, and you're just going to use the most current bar to figure out a couple things. First, you're going to identify the trend. If the background is green, we're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background is red, it's a downtrend. The same is true. You should only be looking to trade with that trend. On the 13-2 chart, we're going to have strong triggers. That first part of the equation, momentum, we're going to make sure that there's no termination conditions. Rules 1 and 2 are met on this larger, slower chart. When they are met, then we're going to go to that 5-1 chart. It's a smaller, faster chart. What happens in 1 bar on this 13-2 may happen in 20 or 30 bars on the 5-1. And what happens is we're going to refine that broad stroke of a brush. We're going to use that go-ahead given to us by rules 1 and 2, and we're going to find the area where the market is likely to continue, and that's going to be your point of entry for a high probability trend trade. And by doing so, it's going to allow you to reduce your risk, and it's also going to allow you to maximize your potential. And I've got a cool little picture why we use those 2 charts. I want to share with you right now, because I want you to think of it like this. Big charts define the area and the direction. The large chart size reflects the large crowd opinions in the market. And then the small chart, that's the small crowd, giving you just enough to get you into your best of the best spot. It forces a pullback. So we're going to be on the side of the large crowd, but we're going to let the small crowd get us in. I like this picture. John Novak put that one together for us, but it really reminds us that we're just going with the flow on this one. So let's talk about rules. Strong trigger lines. Let's go to the live market. I can tell you right now on the S&P, I have strong trigger lines to the downside. I have smalls below the large. The large are wide. They're angled in the direction of the trend. And guys, when I have this trigger look, the odds are favorable for the market to continue down. So as a way to study, every time I have strong trigger lines on the 13-2 chart, remember this broad stroke, I'm going to circle any tails that I see, because this tail is a potential entry on a 5-1 chart, and we're going to come back and put that together. So if I scroll back, smalls below the large, smalls above the large. Rule number 1, momentum. In that uptrend, small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. It's the space created between the small and the large that lets me know that the odds are favorable for the market to continue up. Guys, you're going to hear me say odds favorable momentum quite a bit. Small triggers below the large triggers, just like the live market that we saw. The space between the two lets me know that the odds are favorable for the market to continue down. Odds favorable momentum is the first advantage that you're going to give yourself. That's the first step in the equation for finding a trade. So guys, give me a Y in the room if you're with me. Smalls above, space between, smalls below, space between. Guys, we have a market likely to continue in the direction of the trend. When those small trigger lines work back inside of the large trigger lines, guys, we call this a weakening of the large triggers. And look at the phrase associated. Anything can happen, up or down. We go from odds favorable to anything can happen. This is rule number 1, giving you that advantage of momentum. This is taking away. Yeah, CJ, wait till next week. But this is exactly what we do. Repetition. every day until it sticks, right? Zeba, you're about 7 days in now. Totally different animal, isn't it? And you know what makes it the easiest, guys? Is allowing yourself to be new. Because you're all successful at something. You're all good at something. And we all expect ourselves to be perfect with something brand new on day one. My wife is the worst. She does it all the time. Hey, I'm going to this brand new surgery center. I've never met the doctors. I don't know the procedures. I hope I can have it all figured out by lunchtime. Every day or every time. So guys, we're going to go with rule number 1, odds favorable. Odds favorable, smalls below the large are wide, they're angled in the direction of the trend. Guys, rule number 1 is in play. Rule number 2 tells us what? No termination conditions, room to profit targets are true. The advantage is a clear path. The advantage of momentum or strong triggers is momentum. The advantage of no termination conditions on the 13-2 is a clear path. So guys, what's the other side of that? If rule 1 gives you the advantage, ignoring rule 1 takes the advantage away. If rule number 2 gives you the advantage, ignoring rule number 2 takes the advantage away. So how do we identify a termination condition? It's really pretty simple. 2-part process. Price reaches an area, 1-to-1s, Fibonacci support, Fibonacci resistance, cyan divergence down here, magenta divergence up top. When price reaches one of these areas and the trigger lines don't break through, even with odds favorable momentum, we've reached an area that may reverse the market. We identify this as a termination condition. No more long trades in that direction. Here we see it. Price reaches a cyan divergence low. Absolutely none of the trigger lines break through. We're looking at a textbook termination condition. Whoops. Let's scroll back. Support, triggers above, support's likely to hold. So guys, rule number 2 isn't doing anything more than identifying an area likely to stop the market. 2-part process, brand new users. Price reaches Fibonacci support, resistance. These price bars come in contact. I want you to ask yourself, where are my T3 trigger lines? If they remain above the area of support, support is likely to hold. No more short trades. The rules say wait for the area to break. Wait for that advantage of a clear path. An area is broken when both the small and the large trigger lines get through the area. So give me a Y in the room if you're with me. Price reached, no triggers through, no trades in that direction, guys. We're not giving away our advantage of a clear path. Small and large triggers get to the other side of support. Support begins to act as resistance. We now have the advantage of a clear path. Pretty cool, right? There's one other look. Remember, we're talking about high probability trend trades right now. We're looking for rules to be met for high probability trend trades. You won't be there forever. You are going to be able to read charts. You're going to be able to understand advantages. You're going to be able to understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And guys, this is going to take you to a medium probability trade. And a medium probability trade is when most of your indicators line up for a trade, but one small issue exists. And this will be the vast majority of your trades once you learn how to read your indicators through the high probability trend trade. And when you execute these medium probability trades, you're going to manage them assertively. If there's trouble in your way, you're going to take a portion of the position off of that trouble. You'll be able to identify it through your chart reading. You'll be able to reduce risk. You'll be able to get to a zero loss level. And I bring this up because you're going to see a time when the small triggers have broken through the area, but the large triggers have not. And guys, this is what we call a 50-50. Not because of your chances of success, but because half of your trigger lines are through and half of them are not. And it simply means that the area has not broken, but it has the potential to break with that odds favorable momentum. So high probability, area reach, no triggers, no trade. It triggers clear. Look for the rules to be met. Odds favorable momentum straddling that area has the potential to break with odds favorable momentum. We just saw this in the S&P, didn't we? Small trigger lines break through the area. The large trigger lines do not. That's what we call a 50-50 look. Small trigger lines break through the area. Large triggers have remained above. This is what we call a 50-50 look. This area with all that momentum has the potential to break. And sure enough, it did. And now we just have to figure out how to get this entry so we can make some money, right? Remember those tails that we circled? This tail is this pullback. And this pullback is directly to resistance, and that resistance is inside of favorable large triggers. And guys, I can tell you that I probably have quite a few Nexgen users in this room that took a short trade here. How did they know to enter the market? Well, rule number 3 says, guys, give me a Y in the room if you can hear me, please. Awesome. So I'm going to do this real quick. 5 by 5. You know I say that now, Gary. Where's my live? I went live. I'm not muted. Oh, I've got 2 live streams. That's weird. I didn't turn off the other one. Wonder how long that's been going. All right, here is the link to the live video. And if you can't hear me, I guess I should type it in. All right, so there's a link to the live video, guys. If you ever come in, you can't hear, you can't see, you've always got that link. We're going to go through. We've already talked about odds favorable momentum on the 13-2. We've talked about termination conditions, those areas that have the potential to stop. Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s. And remember, it's a simple process of looking at your trigger lines. Price reaches the area. No trigger lines go through, no trade. Both trigger lines break the area. We have a clear path. Smalls above, large below. The area has the potential to break, guys. So we've identified momentum. We've identified potential areas to stop the market. And now we're going to use rule number 3. Rule number 3 says that we're going to buy or sell an area inside of favorable large triggers. And we're going to buy or sell a pullback, meaning that those circles that we circled on the 13-2 represent potential pullback. So we've got about 4 slides to put it in perspective. During the live market, when your rules are met on the 13-2, this is what your 5-1 is going to look like in an uptrend. There is going to be an awful lot of up bars. You're going to focus on the 5-1 large triggers. Are they strong? Are they wide? Are they up? Are they one on top of the other? And you're going to look at the areas that may fall within them. When we talk about a high probability trend trade, these trades always come from an area. And the areas can be fibs, support or resistance, a mid band, or 1-to-1s. It can be Fibonacci support for a long, a green mid band, or 1-to-1s. And all I'm doing is identifying where these areas are. But my rules say that I'm going to buy a pullback. And a pullback begins with a reversal bar on the 5-1. This reversal bar signals the beginning of that small retracement, the small crowd giving us just a little push. And at the time of the reversal bar, I'm going to create my window of opportunity. And my window of opportunity extends from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers, guys. So it's not the triggers themselves, it's the areas within. You can see that I have fibs, mid-bands, and I have one-to-ones. And I've created a window where the market is likely to continue. Because of the momentum on the 13.2, because of the clear path on the 13.2, I'm going to right-click at the top of this window. And I'm going to activate a limit order, and I'm going to wait for the market to come down to me. Give me a Y in the room if you're with me. Everything says up. We wait for a down bar. At the time of the down bar, I'm looking for the areas inside of favorable large triggers. And then I'm powerless. It's either going to come or it's not. But if it does, if I get that pullback, if it hits my limit order, I'm in a long trade right here at 79.21. And let's look at the recipe one more time. I'm in a long trade because I had momentum. I'm in a long trade because I had a clear path. And I'm in a long trade because I had an entry area. And my entry area is coming from within the window where the market is likely to continue. Guys, my initial stop is going to go below that window where the market shouldn't go. And I'll take this trade 1,000 out of 1,000 times because this is your high probability trend trade. You guys, you're going to see this labeled quite a bit. HPTT, high probability trend trade. And this is a trade that's been back tested, forward tested, traded live by Nexgen users for as long as I can remember. It has the potential to win 70 to 80% of the time. 70 to 80% of the time when I follow these rules of a high probability trend trade, profit target reached. Guys, confidence comes from the memory of success. If you focus on this highest probability trend trade and not even the results, but the entries, learning to identify where to get in at the market at the absolute best of the best spot, it creates management opportunities that are much easier to handle. Because you wait for the pullback, your distance to the profit target is increased greatly. When it begins to move in the direction of the trade, I can reduce risk from where the market shouldn't go up to below that reversal bar. I can reduce risk and maximize profitability. And I'm doing that with a trade that has every advantage that I'm focusing on for the first 30 days when every indicator on every chart lines up for that trade. So we're going to look right now, and let's do this together, okay? Remember we did those circles. I know that I have a potential area. Strong triggers, no termination conditions. And guys, once the rules are met on the 13.2, let's do this. Smalls below, larger wide, odds favorable momentum. Give me a Y in the room if you see it. This is probably going to be the easiest part of the trade to recognize for new users. Great. Smalls have smashed through the area. The large are still above. So what kind of trade do we have here, guys? We have a 50-50, right? We have an area with the potential to break, but it hasn't broken yet. It's a medium probability trade, but the entry process is the same. So my rules are met on the 13.2. And the 5-1 is trending down, right? The 5-1 is pushing down all of these down bars. And I'm just watching it and I'm saying, well, okay, my triggers are rolling. They're both down. I'm looking for areas here. I see resistance. I see a mid-band. The triggers are above. What are we waiting for on this 5-1 to identify our window of opportunity? Do you guys remember? When everything's going down, we want the market to do what? We want the market to come back up. We want the market to give us a reversal bar, and that reversal bar signals the beginning of a potential pullback. So I'm going to identify my large triggers. from the top to the bottom, right? And I want you to remember, these are coming down like a shark. I mean, there's force behind them, moving average. What areas, as the market pulls up, may fall in? I've got a mid-band. I've also got resistance, and I'm not sure if resistance is going to make it. So in the moment, because that mid-band is going to be right there at those large triggers, this is my most likely spot for continuation. As the market pulls up, you'll see that the mid-band moves down, the triggers move down. I'm a big fan. I'm going to go a couple ticks below, right? Below mid-band. Perfect, Zeba. And it's coming up, and notice how everything's falling together. It's okay to move your entry. This resistance happens to be right at the bottom of the window, and now our entry has been met, and I want you to see it. The trigger lines move as the market retraces from the bottom of the triggers to the top of the triggers. And then my window of opportunity really extends from the lowest point of resistance to the highest point of resistance. You see it? Guys, you just entered a trade with the advantage of momentum, with the advantage of no termination conditions, and you waited for the pullback to the area of resistance inside of favorable large triggers. Your initial stop is up here where the market shouldn't go. And once I get a reversal bar, my stop is reduced. It means that you're one of us, Zeba. You're a lifetime member. You're an owner. Congratulations. Guys, give me a Y in the room if you see it. Momentum, clear path. Notice how the trigger lines are strong on my 5-1. The smalls are outside of the large just like they are. My window of opportunity is small. Don't trip over pennies, guys. If that resistance is at the bottom, give up a couple ticks rather than miss the trade. So now here's the great part. I'm in. My risk is reduced. Where's this trade going? My first trouble spot is 41.20.25. Do you see it? Odds favorable momentum. I can identify where the market is likely to go. And look at that thing go. Guys, this is your best of the best. This is your highest probability trend trade. This is the one that's going to teach you to recognize entries. And if I circle the entry, it comes right on the tail. You're not going to be able to trade those tails. You're going to need that entry point to identify it, right? Don't wait for the tail. When the rules are met, identify your potential entry point. If you're studying, the two circles should line up. Is everybody comfortable with that? Odds favorable, nothing in the way. Let's create a window of opportunity and have some fun. So we can study, right? If all I open up is my 13.2, all I'm looking for is odds favorable, no termination conditions. Here we have odds favorable and we have a tail, but it's directly into a termination condition. Here I have odds favorable. It's in the termination condition. Guys, you're training yourself to be patient. You're training yourself that high probability trend trades don't happen every second of every day. You're also training yourself to take entries right now. You're training yourself to identify, the absolute best of the best entries where the market is likely to continue. And if we look at crude oil, are they giving us any opportunities this morning? We can use Fibonacci to recognize consolidation. Do you see it? From support to resistance, guys, this is a market consolidating. We don't have any rules met. You're not getting chewed up in those crazy areas. You're not getting chewed up when there aren't advantages. 935. Paul says at 935 we have smalls above the large are wide, they're angled in the direction of the trend. Paul, you want me to circle that tiny little tail? So let's look at two things, right? Let's ask ourselves, do we have odds favorable momentum? Guys, I'm going to say yes. Small's above the large are wide, they're angled in the direction of the trend. See how your trigger lines have cleared? Everything's above that area of resistance. It's now acting as support. Has rule number 2 been met? Does everybody see it? I say it has. Paul said that it had. Ziba didn't reach an area. Cool. So let's see what this circle looks like. I'm going to extend it out a little bit. Divergence, loss of momentum, didn't make it. Loss of momentum, didn't make it. Third divergence. And that market pushes right through. Do you see this? 1, 2, 3 losses of momentum. Paul, you know this, but you got caught up on trigger line location. If I go back to termination conditions, guys, there's one thing that I can look for on my smaller, faster chart, and that's 3 divergences in the same general price range. And it may terminate a trend. Has everybody watched their videos? They understand what divergence is? Because it's pretty simple. Let's go through it. And I'm going to get rid of all of this because we're going to talk about it. Divergence is a loss of momentum. When 3 happen in the same price range, boy, I'm struggling today. It may end the trend, even momentarily. Price pulls down and creates this pivot. When the negative number prints, guys, it lets me know that momentum didn't follow. Give me a Y in the room if you're with me. When the negative number prints, I have a loss of momentum. What's the first advantage that we give ourselves in a high probability trend trade? Momentum, right? So look at this. It happens again. Once again, I have a loss of momentum. Now it happens a third time, 3 times in a row. Price is pushed down and lost momentum. Guys, this may terminate a trend. And there's a key look, and this is what Paul was looking at. Whoops. If the small triggers are inside of the large, it adds a little fuel to the fire. If the final pivot is higher than the previous from a low or lower than the previous from a high, it adds fuel to the fire. So let's rank these. If 3 divergences stops the market, that's the first thing that we look for, right? That's the one. That may end the trend. And 3 divergences on their own in the same price range may end that trend. That's the first, using 3 divergences. The second is if the small triggers work inside of the large, then those 3 divergences become more powerful. If that final pivot, so one won't undo the other. So Paul, when we look at your picture, those 3 divergences in the same general location is a termination condition. Paul said, but the smalls remained outside. Well, that just means that it's not as strong of a termination condition as if the triggers were inside. So these 3 divergences are identifying change on the 13.2. Does that make sense? So while we had odds favorable, while we had no termination conditions on the 13.2, these 3 divergences told me, all right, sit on your hands for a second, Mark. This trend may be ending. Everybody good with that? This is a termination condition that you'll see on the 5.1 before you see it on the 13.2. And if you see it on a 13.2, we can really expect bigger moves the other direction. But your focus for the first 30 days isn't deciphering all of these different things that require you to read charts. I would love, more than anything else in the world, guys, I want you to see this. I want to see every one of my new people saying that I had strong triggers and I had no termination conditions. And guys, show me a loser from that window of opportunity. Show me that you're able to identify the area where the market is likely to continue when the conditions are right. Because if you do this, if you learn this entry, it's going to make your life easier. So I made some pictures for you guys, and I'm going to share them. Just identifying entries, guys, because this is what I want your first 30 days to be. This is only a 5-1 chart. The red box shows your large triggers. The teal box shows your window of opportunity. Your limit order goes at the top of the window inside of favorable large triggers. Is everybody comfortable with that? This support is outside of the large triggers. It's not in the window. And guys, I made a few of these pictures. Steal them. Because your first 30 days revolves. Your first 30 days is nothing more than entries. I want you to write that on a piece of paper. I want you to convince yourself that that's exactly what you're going to focus on for 30 days. Is nothing but entries. This fib is outside of the window. That's not a potential entry. Does everybody see it? This fib is below the window. Your window is inside of favorable large triggers, guys. So there's some pictures for you. Whoops. And I messed up that one. I just took a picture of it saying outside and didn't give you the whole picture. So let's spend 30 days entering the market, right? Let's go through. What do we see right now on crude oil? I've got smalls. They haven't quite broken through the area, right? My large are flat. They're not wide angled in the direction of the trend. 78.31 is still a potential termination condition in the moment, guys. My large triggers are well above and they're flat. And now look what's happening over here. I've had 1, 2 divergences. The areas haven't broken. I'm giving away my advantages of momentum. I'm giving away my advantage of a clear path. And then the same thing up top here. As we're approaching the one-to-ones, looking for opportunities, waiting for that odds favorable momentum. And guys, sometimes it's a wait, isn't it? How many trigger lines made it through these one-to-ones? Can anybody help me with that one? Price reached the one-to-ones. How many trigger lines made it through? Give me a number, guys. Zippo. That's the perfect number. So what does that mean? That means that I don't have a clear path. Not looking for long trades, even with a green background, right? Even with a mid-band. Rule number 2 takes away my advantage of a clear path, and sure enough, that market pushes back down. Sometimes we get caught in areas. Price gets to the one-to-ones and absolutely none of the trigger lines go through. I'm not going long. Right? Not taking that long trade. And then price pushes all the way back down to support, to the mid-band. None of my trigger lines break through. I'm not looking for that short trade. Guys, 90% of what we do is just reading indicators. But now this termination condition has created a full reversal. This full reversal, I'm at the beginning of odds favorable momentum. Do you see how I talk this through? With this odds favorable momentum, with this reversal up top, with the smalls breaking through fibs, through that there, can't I identify my window of opportunity, those areas of resistance inside of favorable large triggers? Let's take a picture. This is what we call a pre-trade picture. And here's a checklist. Is the market coming from a good top, a strong top, a termination condition that creates a full reversal? Absolutely. Do I have odds favorable momentum? Absolutely. Do I have no termination conditions? Absolutely. Potential to break. And do I have an area for entry inside of favorable large triggers? Guys, this is your pre-trade picture for that setup. And look what the market did. I'm going to cancel that order. It didn't give us an opportunity, did it? But it went straight to Fibonacci support, straight from Fibonacci resistance. Part of having an advantage is recognizing that there aren't always entries, that you don't control the market, that your rules create a set of advantages, and your chart reading is going to get you to where you want to be. So guys, that checklist that I just used, I'm going to give you a couple copies. I'm going to give you a high probability trend trade checklist in the room here, guys. The exact same materials that I used to determine that my rules were met for entry. And I'm going to show you something. Here's the checklist. Just got dropped in the room. Print this out. Put it on your desktop. Police yourself every time you take a trade. But I also put this one in here. I want you to download it. It's the exact same checklist, the exact same rules for a high probability trend trade. And I took pictures directly from the manual of what everything means, what it looks like when it's happening. Put that one on your computer, study it every day until you're so comfortable with that look that you can look at your charts, identify the advantages. Price reaches support. None of the trigger lines break through. I'm not looking for an entry at a mid-band, right? Because I've given away the advantage of a clear path. So guys, this is what we talk about in the first hour. In the first hour, we talk about rules. We talk about the looks. We'll go through the live charts. We'll identify termination conditions, right? We'll identify when rules are met. Odds favorable momentum. And now the second hour, I'm going to start going through and we're going to look at your charts. We're going to look at what you guys have been doing. So if you have a question, take a picture, put it on a chart. If you've taken a trade, like Ron has right here, take a picture, post it in the room. Eating the elephant one bite at a time. Ron has a little different approach. Guys, and this room is for everybody. This room isn't only high probability trend trades. That's your focus for 30 days. Your ability to read your indicators is going to create advantages. Recognition of this odds favorable momentum with absolutely nothing in the way, being able to identify where the market is likely to go. Ron likes to jump in, make a couple $100 with that much momentum and a clear path, and then get out and wait for the next opportunity. It's his plan. He's written a plan that works for him. Ron, it's a great trade. It's a great recognition of momentum. It's an awesome recognition of nothing in the way. And it's a quick, simple entry. Paul, same one, right? Here's the one we talked about. Odds favorable on the 13.2. Absolutely no termination conditions on the 13.2. But three divergences in the same location here on the 5.1 say that this is my most probable outlook, giving away the advantage of a clear path. And this is where putting it all together helps. This is a beautiful look if it weren't for those losses of momentum. Everything about that look was solid, Paul, except for the three divergences. It told you to be just a little bit patient, right? All right, guys, I'm going to take a quick break. I want you to do me a favor. If you're brand new in the classroom, first of all, let's see what the market does off of that termination condition. But if you're brand new in the classroom, I want you to take a picture of your chart and I want you to type on there, Mark, this is what I see. That's all I want you to do. Take a picture and tell me what you see. Doesn't have to be a trade, doesn't have to be a rule. Just tell me what you see. I'll be back in just a couple minutes. And then we're going to start the second hour. We're going to talk about writing a plan, focusing on the entries. We're going to keep checking in with the live market, looking for opportunities, looking for rules to be met. I will see you guys in just a minute. I'm going to go reload my water. Back in a second. All right, guys, we're back. I love it. New trader. Posting pictures. Showing me what you see. I love it. CJ Canty. And guys, I know everybody's got these super secret names. If you want to be called something other than what your screen name is, let me know. All right, so this is a great picture. And CJ, this is pretty cool because you put losing momentum and you put losing momentum. Rob A, I'll be right there. I got you. And this is exactly how we have this conversation. Watch this. So I'm going to take a picture of your picture. because there's two separate looks here. And the first is small triggers outside of the large triggers. Large triggers are wide, angled in the direction of the trend. So this one, CJ, is odds favorable, isn't it? That's the exact look that we look for when the market is likely to continue in the direction of the trend. And you'll notice that that small is above the larger wide is the exact same look over here to the downside. Odds favorable momentum. And then here where those smalls are returning in, absolutely losing momentum. You see the difference between the two? You guys, this is why posting pictures is so important. Cool, because one thing that I did a lot when I was learning the software, and guys, I'm just like you, I started at ground zero. My brother wrote the software. I ignored him for 20 years for the most part. As I had to go through it, I had to learn these as well. And I'm telling you, I can't tell you how many times I just misinterpreted, I would say. So that's strong, that's weakening, and then that's officially weak. And look what happens after. Pretty cool, right? So you'll start getting these, but when you ask questions, show me what you're seeing, you'll be amazed at what we end up coming up with together. Rob A., you say please critique. So you've got your checklist. So good top or bottom 13.2. Termination condition creates a full reversal, right? Isn't that the definition, Rob, of a good top or bottom? Termination condition creates a good reversal. So absolutely, check yes. Smalls above the large on the 13.2, odds favorable momentum. Absolutely. So Rob, so far we're 2 for 2. Do you see it? No termination condition. Runway is clear. Were you a pilot, Rob? On the 13.2? Only on a boat? That counts. All right, so this is where we change our conversation a little bit. Let me open this one up real quick. I find that if I take a picture of your picture and then open it up, what happens is we can really kind of get into the nitty-gritty on this one. All right, Rob. So you said no termination conditions present. And this is a great opportunity to review what creates a termination condition. It's a two-part process, right? Price reaches an area. Where are the triggers? So Rob, price reach these one-to-ones. Do you see it? And all of the trigger lines remain below those one-to-ones. The small triggers haven't even been able to get through. So what's happened, whoops, get off of there, is that the termination conditions aren't true just yet. We've run into an area that has the potential but isn't guaranteed to stop the market. So I would click no on that one. And then I want to go to the other side of what we're looking at, Rob, because I think you did this wonderfully. Remember we said having the rule met means that you've given yourself an advantage, right? And not having the rule met means that you've given away that advantage, and that's okay. So we're going to look at kind of what that means. So Rob, you had everything going for you, right? You had strong triggers. You had a good bottom, but you knew that you'd given away the advantage of a clear path. So I'm going to focus in on your entry real quick, and I want you to see something. Guys, this isn't a high probability trend trade anymore because the advantage of a clear path has been given away. But Rob, remember that when we talked about, and really everybody, your ability to read your indicators is going to take you from a high probability trend trade to beginning to recognize and identify these medium probability trend trades where maybe an issue exists. Rob, all you've done is you've identified the issue. This is your issue, the termination condition. So you can use chart reading to weigh advantages the better you become at chart reading. There's no divergence. There's strong triggers. There's a tiny window of opportunity. And Rob, with all of that momentum coming from a termination condition, it has the potential to at least retest the area. Your perfect entry gave you management opportunities, and then this loss of momentum with the triggers inside into a termination condition gave you the information you needed to get out and not take a loss. So Rob, beautiful execution. Absolutely beautiful execution. It's not my job to say that that's not a good trade because rule number 2 isn't met. It's my job to say, look at how you read your indicators. And if you didn't read them the way I just did, now you know how you could have read them, how you could have obtained an advantage. And maybe this becomes a trade that you take more in the future. And that's okay. That's all this class is for, right? What do we see? What does it mean? Cool. So if your plan is to only do high probability, then you broke your rules. Cool. And maybe that's the only conversation that we needed, but I do love chart reading, so it's fun to talk about. Termination to termination, guys, we're watching the market try and figure out where it's going to go right now. Fibonacci allows you to recognize areas likely to stop the market, and you can say to yourself, I need the advantage of a clear path before I move in that direction. Yeah, tomorrow's the official roll date, Paul. So we'll probably see things change. Rob, did that help a little bit? I hope so. Earl, let's take a look. Earl, same idea, right? Odds favorable, everything says down. The smalls haven't broken through the area yet. So we're looking at the exact same scenario that Rob just had. It's a potential termination condition. It may stop the market, but once again, it's coming from a great termination condition up top. There's no divergence. There's a small window of opportunity. And from that little spot with all that momentum, Earl, you had room to retest. Waiting for a confirmation, getting in late took away a lot of your wiggle room. But nice trade. Same thing, giving away the advantage of a clear path, but managing it appropriately. Joel? So I like it. Joel, you're just identifying. You're saying good bottom, which always makes me giggle because I'm 12 on the inside. So let's go through some terminology. So when I talk about, excuse me, a good bottom or a good top, Joel, I'm talking about a termination condition that creates a full reversal. Do you see which direction are your large triggers going? Still down, right? So I haven't had a full reversal yet. So what I have is a termination condition. When the reversal happens, now I have a good bottom in place. but it comes straight to a termination condition. A good bottom doesn't negate the termination condition. And then the market pulls back down. We get one of those 50-50 trades, right? Two divergences in the same price range. Small triggers are close. So what we're waiting for right now, guys, and man, I love Fibonacci because it allows us to do this. Let's take a picture. The market has told us in no uncertain terms that the buyers can't get past resistance and the sellers can't get past support. We're watching a fight from termination condition to support, from support to resistance, from resistance to support, and now they're pushing back up. If I'm going to go long, I want the buyers to clear this area. They've already told me that they're struggling. If I want to go short, I want the sellers to clear this area. I can use Fibonacci, I can use rules to identify these areas where the market is really putting up a fight. Does everybody see it? It doesn't mean that there may not be opportunities to get to that area, but I'm going to respect these lines in the sand. And Rob, when you get a 50-50 from a market that can't seem to break out of an area, it can go one of two ways. It can run forever, or it's just that fight again. D, you say with tight stop losses you can still make money in a range-bound market? Is that what you're asking? I guess it depends on what tight stop losses are. If you have momentum, right? Even with the termination condition and all this momentum, if you took this entry, you know where your stop has to go, and you know exactly where the fight's happening and where to get out. So I suppose if your rules are met, your ability to read charts is intact. But I don't change my plan on market conditions. And I think this is the lesson that I want to give here. I don't change my plan. Why is that? Because my plan gives us statistical advantage, right? Every time I execute a trade per this checklist, I know that I have a 70 to 80% chance of winning. So D, if the market isn't giving me a clear path, or the market isn't giving me odds favorable momentum, or the market isn't giving me an entry inside of favorable large triggers, then I'm giving away one of those advantages that's been proven to win more than it loses. Does that make sense? So in the beginning, focus on the best of the best, focus on those entries, and D, what's going to happen is as you grow with the software, just like you said, you'll be able to find some shots in there without a doubt. You might say, well, I've got my defined range, and you'll be able to identify ways to make money. So now we're back at the upper line in the sand, right? We'll see what happens here. Yeah, don't chase, D. Is there anyone in this room that's not trading because they want to make money? How many of you are doing it because you have so much money, you just want to give it away? So give yourself the advantage, right? Every time. You want to make money. I want to make money. That's why I'm here. Andy Trader says strong triggers. Price hasn't reached support. There's one of those tails. I wonder if it gave him an entry. Look at that. Textbook. Area of resistance inside of favorable large triggers. Andy didn't trust it completely. He gets in a little bit late. Nice trade, Andy. Guys, remember that you want to make money. Remember that that's why you're here. All right, NG time. You got itchy and jumped the gun into the termination condition. Didn't work out for you. But then you turned it around. You let everything start to roll, you hop in, and you take it all the way down to the next area. Remember that here you're jumping in. Let the areas clear. Give yourself the advantage of a clear path. It helps a lot. All of your triggers are still up. I see why you did it. And then when they turn, you go for that short. Nice job, NG. I love those momentum style trades, guys, but remember, they rely on a clear path. All right, they're fighting, but look at that. Looks like the buyers have taken a little bit of a run there. Whoops. Guys, this is what happens when you don't close your untitled and you try to shift in between workspaces. There we go. So this is crude oil. Termination, full reversal, 50-50. Smalls are through, large are not. All we're doing is we're reading our indicators, right? So let's take a picture and talk about windows of opportunity. And let's make the shape from the top of the triggers to the bottom of the triggers. Does everybody see that? These are your favorable large triggers, wide, strong. Now let's go from our highest point of support, whoops, to our lowest point of support, from 78.32 down to 78.15. That's 17 ticks, right? That's $170 worth of risk, or $170 range. And when my stop has to go where the market shouldn't, I'm probably looking at $200 plus worth of risk on that trade. Guys, does that make sense? The window is big. Does everybody see it? My triggers are spread. There's my window of opportunity. And that window of opportunity at the time was from an area that hadn't even broken. Am I willing to risk that much on a trade at an area with the potential to break? These are questions that you have to ask yourself. Kind of cool. So as you grow, you're going to be able to answer these questions. It's not inside of large triggers 100%. There's the bottom of my large, and there's the top of my large, right? That's okay. So this is my highest point of support, those 1-to-1s. This was my lowest point of support, that fib. Does that make sense? So support is inside. So the smooth triggers are your large triggers. It's just the moving average from the 5-1. The stepped, the lighter ones, are synthetic, and those are actually your 13-2 large triggers to make sure that you're trading with the trend. So now look at what happens, Zeba. Let's take that same picture 2 minutes later. And let's go back and use the shape. Where are those from the top of the large triggers to the bottom of the large triggers? You see it? There's your triggers. And now there's the area of support. Whoops. Inside. See how that window shifts a little bit as the market moves? But we're still looking at 45 down to 20 something. It's a huge window on an area that hasn't yet broken, on small triggers that have returned to the large. And if divergence prints, it lets me know that I even have a loss of momentum there. I've got no divergence, no slowdown, but my smalls are up against the large. My smalls are up against the large. We've given away the advantage of momentum, so I have to make the decision. Am I willing to enter at the top of a window without the advantage of momentum? Or maybe if things are slowing down a little bit, it has the potential to push lower. And this is why in the very beginning, guys, these are a lot of things that you have to think and talk through. On day 1, you're not going to understand them all. On day 10, they're going to start to click. But if you spend 30 days focusing on waiting for the absolute best of the best, that highest potential, that everything agrees, that odds favorable, that nothing in the way, what you're going to find is you're going to begin to do this analysis almost instantaneous. And then Ron says everything says up. He clears the area. He gets in. He gets out. Just taking a little money here and there. Nice job, Ron. From the highest point to the lowest point. We've already given away the advantage of momentum, right? The smalls have returned to the large. One of the lines has started to come in. It may go from here. I don't know what the market's going to do. All I can do is be consistent. All I can do is take my trades per my rules, focus on my entries, and learn how to read my charts. And guys, that's the next segue. We'll see what happens there. One of the most important tools that you can give yourself is a clear path to what you want to do. For the first 30 days, you're focusing on your entries. I think I've said that 100 times today. I'm going to continue to say it. It's not fair to you to put the pressure on yourself to be a successful trader in the first week of learning software. But what you can do by the end of that first week is understand where your best entries come from. So write a plan and personalize it. My trade is the high probability trend trade. And in order to enter this trade, I must have the conditions of the checklist met. Has everybody done this? No, of course not. It feels like work. Had one of our veteran traders, 17 years with Nexgen, tell me, he goes, if you don't have a plan written down, you don't have a plan. I'll show you, Ziba. Give me just 1 second. In order to take this trade, the conditions must be met. Here's that high probability trend trade checklist. I'm going to take a couple pictures of the best trades. And guys, this is your first 30 days right here. Nothing but entries, right? We're eating an elephant. Ron put that on his, little bite of the elephant. One bite at a time. First, we focus on entries. This is what it's going to take to get me in. Here's a picture of what it looks like, right? Here's a picture of a high probability trend trade so that I can compare what I'm doing, what my plan is, to what I see. And that's it, guys. This is 30 days, high probability. And then you start adding the medium probability. Here's that 50-50. You're only expanding the plan. You're not taking away from what was creating success. You're adding another condition that's been proven to win more than it loses. So on a 50-50, you may say no divergence present, no slowdowns on an area with the potential to break. You might insist that those small triggers are outside of the large. So you're growing your plan, starting from an entry of the best of the best, then working into that exact same entry when a small issue exists. You haven't even begun management yet, guys, because management takes your ability to read charts. So at the bottom of this example plan, I put in a very mechanical approach to management. Trade 2 contracts. Initial stop outside of the window of opportunity. Move it behind that reversal bar. Take quick profits. Keep it mechanical. Guys, I just put a copy of that example plan in the room for you. I want you to steal it. I want you to download it. I want you to change it to your name. I want you to create it and make it your plan. And if you commit to 30 days, and I know that feels like a long time, but remember, You're looking to make a career, right? College took more than 30 days. Your trade school took more than 30 days. Hell, some places orientation takes longer than 30 days. Commit to those entries, let management work itself out. Then focus on management. Every time you take a picture of the perfect entry, look for management opportunities so that you can grow that plan. As you begin to recognize termination conditions, patterns, go through it. So Ziba, you see 4 green dotted lines. No worries. Let's talk about what's what, right? On your 5-1 chart, these smooth lines, these belong on the 5-1. These come from that time frame. This is a 5-1 large trigger, and all a large trigger is a moving average. And I don't know a lot about the technical. I don't care why or how. How do I use it to my advantage? That's my question, guys. For those of you that are brand new, I'm not a tech guy. I know absolutely nothing about programming. I was an English lit major. I like poetry. I can write a haiku about trading. But what I do know is that the large triggers, the smooth dashed, those are just the 5-1 large triggers. And then Ziba, this other set, the ones that look like they're stepped, they're a little lighter with the dashes, these are your synthetics. And anytime you hear synthetics, forgot an N. Anytime you hear synthetics, it means that it comes from a different chart. These 13.2 large triggers, Ziba, are these stepped dash ones on your chart. Are you with me so far? No? That's okay. Can we try to focus on what's important then? Watch this. Does everybody here drive? Everybody has a car, right? When you turn the key in that car, it goes vroom vroom. Not everybody understands internal combustion. Not everybody understands that when you turn that key, it activates a solenoid that comes from the main fuse off of the battery that creates a rotational effect in a starter that turns the flywheel, that begins the process of combustion, that gives you spark. Not everybody knows that. It doesn't matter. What you do know is that it goes vroom vroom and gets you to where you're going to be. So Ziba, let's simplify. And I don't know, you might be an engineer, because my engineers love to overthink, right? It's just in their nature. That's okay. My father was an engineer. The one thing that I know, Ziba, without question, is that when these two trigger lines are one on top of the other, it creates a small window of opportunity. Do you see it? When both of these triggers, no matter how they're made, no matter where they come from, no matter what witchcraft created them, when they trend one on top of the other, look at how tiny and concise my window of opportunity is. This is an advantage. So on that same token, it doesn't matter how they came to be. When they're trending one on top of the other, I get a tiny window of opportunity. Ziba, I don't know how to create these trigger lines, but I do know how to read them. So if you focus on when these two trigger lines trend one on top of the other, it creates a tiny window of opportunity. That tiny window of opportunity creates an advantage to get in the market where it's most likely to continue. Does that make sense? Pretty cool. And this was for me because I like to know how stuff works. I really do. But I realized that it didn't matter initially. And you can always go back, Ziba. You can go back and study trigger lines. And you can blow up John's email and go, John, I want you to talk to me about the creation of the synthetics. And he'll love it. He'll have a blast. But all you need to know is that when those trend one on top of the other, it creates a tiny little window of opportunity. Absolutely. Which one did you want? This one? And then there's one going the other direction. Absolutely. That's a great question, though. It's a great question. How do these things come to be? I don't know. Elfin magic. No, they come to be because my brother is really stinking good at creating software. And he knew that when these two trend one on top of the other and the areas fall inside, it creates an opportunity that you guys can make money with. One divergence, strong triggers, pulls right back to support inside of favorable large triggers. Two divergences, slowing down twice, pushes back a little bit. There's a third divergence and the small triggers are inside. This becomes a management opportunity. But if you take the first, if you take the best, if you're in at 12, you probably already made a lot of money. It's a 50-50, Paul. Smalls are through, large are not. And then there's our third divergence. Loss of momentum, right? This is an area with the potential to break but has not broken. And this is us losing momentum at that area. And look what it's doing. Isn't that amazing? Simple rules, recognizing a couple patterns can create advantages. It just takes time to learn it, right? If you go out and buy a treadmill, you don't wake up the next day 50 pounds lighter. But if you put the work in and you lose a pound a week, you take a small bite every week. By the end of the year, you can be down 50 pounds. So what we just saw live, have an advantage, take it. Losing my advantage, manage it. This says my advantage is gone. And it pushes up a little more to get you guys trading on hope rather than rules. And then boom, down it goes. And you're absolutely right, Joel. The great thing about simulation is you can try everything. Guys, I'm going to say this with the utmost sincerity. Screw it up as bad as you possibly can in the beginning. Make every mistake. Don't be afraid to pull the trigger. If you're afraid to enter what you think is a trade with pretend money, how are you ever going to do it with large money or with real money? Guys, this is your path to success, to becoming a confident trader ASAP. Post your trades in class, everything that you take. Let's talk about it. Track them in a spreadsheet. Learn the trigger line and Fibonacci rules for when it's okay to trade. Learn your rules for when you'll pull the trigger. Guys, that's that example plan that we just talked about. What's it going to take to get me to pull the trigger? I better be able to check yes on this checklist. I have to learn my rules and I have to simulate daily. I have to practice these rules every day. Every day, when I think I see an entry, I have to take it, I have to submit it, I have to look for feedback. I'm here 15 hours every week, and my sole purpose in life is to teach you to read these indicators. 15 hours a week, guys. Post pictures in class until you're sure you have the correct rules. Remember, Rob posted a picture in class, and he said that he was only taking high probability trend trades, right? And because he posted in class, we were able to identify where rule number 2 had been broken. So he got the feedback live. Hey, you missed a termination condition here. Remember, that's rule number 2 that provides the advantage of a clear path. So Rob gets to go into his next trade a little more focused on that clear path. Simplify your plan, guys. Keep it easy. Keep it focused for the first 30 days. What look will you commit to? You have to learn the look so it becomes easy. You do that through repetition, through study, through market replay, through going back and circling those tails. And then you have one of the greatest advantages. You can use that market replay. You can go back and replay the day. You can fix the mistakes that you made. You can work on a management plan. You can look for second chance entries. You can test a theory that you see. I did my market replay yesterday, guys. I traded after class, and then I went back and I retraded the whole day, so I traded during class. And I focused on some management things, and I'll tell you what, I did better on market replay because I was focused, it was simulator, and I caught some moves that I didn't catch because I was teaching class. Take pictures of the correct trades when you market replay and bring them to class. Guys, I had a client that would come in every morning and show me about 15 pictures, 15 trades from market replay. Every chart annotated. This is what I see. This is why I did it. What do you think? And we talked about every one of those trades. He's absolutely crushing the game right now, Paul. Repeat the process every day until you're always taking the correct trades, guys. Not until you're taking all the winners. Not until you never lose, but until you always take the correct trades per your rules. Get out of the mindset of letting wins and losses determine whether or not you're being successful. Get into the mindset that your execution of your plan is how you gauge success. Because if you're always taking a trade that fits the rules and the rules have been proven to win more than they lose, well, you're guaranteeing yourself that you can win, and you're guaranteeing yourself that it may be time to trade live money. And then once it's time to trade live money, guys, you can go to one of these prop firms and trade their money. Take your awesomeness, pass their combine, let them fund you. They'll give you 90%. They take 10% for putting the money up, and you can trade that proven methodology. Guys, that's your plan to being successful as soon as possible. Does that make sense? It all starts with figuring out how to get in the market, how to read your indicators. Price reaches support. Absolutely no trigger lines break through. Absolutely nothing to do. Smalls are below the large. I don't have momentum. None of my triggers are through the area. I don't have a clear path. So if I don't have momentum or a clear path, guys, I can do one thing. Actually, I can do two things. I can sit on my hands, or I can break my rules. Which one is going to foster longevity in your trading? I feel like I'm on a soapbox here. Sorry, guys. One more picture for you. When you talk about rules met and not met, the hardest thing as a day trader is to do nothing when there's nothing to do. The market doesn't provide statistical advantages every second of every day, but if you're patient, you'll catch them. Now the smalls are starting to break above the large. Live market, right? We're coming from that termination condition. Everything is beginning to point up. We're beginning to clear these areas. Smalls continue to accelerate, larger above the areas. Where are my large triggers? There's the top of them. There's the bottom of them. Notice how they're split. I've got a window from 23 all the way down to 12. Zeba, remember we talked about it doesn't matter where they come from, but when they trend one on top of the other and create a tiny little window of opportunity, I have an advantage. How do we feel about the size of that window of opportunity, guys? Does that feel like acceptable risk? Because my stop goes all the way at 78.05-ish, which is about 18, 19 ticks, almost $200 worth of risk per contract to get up to that next key area. These are questions that you're going to begin to ask yourself. Is the risk worth the reward, guys? You see a mid-band right in the middle of the window? Is it inside a favorable large trigger, Ziba? So let's do this then. There's your synthetics. There's your large. It's just floating in the middle, isn't it? It's outside of the synthetics and below, but it's above the large. It's kind of a wonky look, isn't it? This is what we call split triggers. Split triggers don't provide an advantage. Because which area? Which triggers? See what happens? And now it just pulls down to the lowest level. If you got in up top, you're hating life. You're scared to death. Your risk was huge. Sideways and lazy looking. Does that make sense, guys? There's a look that provides a distinct advantage. There's a look that creates that area where the market is likely to continue and makes it huge. Now you could take it from up here, but your risk has to be all the way down here until that mid-band, until I get that reversal bar. And it worked. Look at it go from the lowest point of support right there at favorable triggers. So you're going to recognize patterns over and over. You're going to see things every day where the market repeats itself. You're going to see termination conditions that appear to happen all the time. Pivot stop outs. You're going to recognize trigger line location when you get divergences. You'll be able to identify odds favorable momentum. You'll be able to identify the areas that need to break in order to have a clear path. And then Ziba, do you see how they're one on top of the other? Doesn't that just feel better? No, you're not asking crazy questions. You're asking absolutely amazing questions. Ziba, the people that get to where they want to be are the people just like you that say, I'm here to learn this. I'm not here to worry about whether or not people think my questions are silly, because they're not. They're all perfect questions, and they're great questions, and they're providing clarity. So yay for you. And guys, if you're sitting on the sidelines hoping that your question gets answered, it may not, because if Ziba doesn't ask it, what are you going to do? Good job, Ziba. Which two lines above each other? So new trader, we're talking about that window of opportunity, right? Cool. So I'm going to do this real quick. And I'm not saying that there's a trade to be had here. But what I can do is I'm looking for an area. Rule number 3 says area inside a favorable large trigger. So here is the top of the large to the bottom right here. Do you see that? That's just the range from the top to the bottom of the triggers. That's not our window of opportunity. Our window of opportunity for a short trade goes from the lowest point of resistance, these 1-to-1s right there at the mid-band, to the highest point of resistance. So while the trigger lines create a large area, we're looking for the area of resistance within them. Does that make sense, new trader? Now, okay typically means no. Does it make sense? If it does, great. If it doesn't, let's go through entries again. Because guys, I'll do this all day long. My only goal is that you understand this. And typically okay means that I'm not really sure, but I think I might be. but I sure hope he talks about it again. So let's do it. Absolutely, guys. Let's talk about it all day. Thank you, Joel. Yes. Yes, I will. I'm going to find an easy look. Here we go. And I'm going to scroll right back to 9 a.m. when this market is getting ready to open. Oh, that's 10:09. All right, and we're going to get rid of a lot of noise, guys. We're going to just go through, and I'm only going to put triggers on here. I only want you to worry about momentum for a second on my 13.2. And I'm going to get rid of this. And let's make the 13.2 look like the 13.2 needs to look. All right, so new trader, CJ, Zeba, everybody learning entries. Everything starts on the 13.2, right? Do I have odds favorable momentum? Do I have small triggers below the large triggers? Are the large triggers widening and angled in the direction of the trend? Absolutely, right? This is the first step. This gets the ball rolling. You know what's funny, guys, is I've gone through this a million times, and I still talk myself through it the way we talk through it in class. A trade is momentum, it's a clear path, and it's an entry area. I love this picture. Thank you, John Novak, for putting this one together. So we have number one of the equation, right? We have momentum. Rule number two says a clear path. How do I determine a clear path? On the most current bar, if I have not reached an area, I have a clear path. If I've reached an area and none of the trigger lines have gone through, I haven't. So after I determine I have odds favorable momentum, I have to ask myself, do I have no termination conditions? Do I have the advantage of a clear path? So new trader, CJ, Ziva, do we have the advantage of a clear path? Without a doubt. So this is where I say to myself, rules 1 and 2 have been met on my 13.2. You know how much I need it now? Gone. I'm going to turn my attention to the 5.1. On my 5.1, everything's going down. My triggers look like they're rolling. It's not my best look. I've determined that my rules are met. Now my synthetics are rolling. What are we waiting for? Rule number 3 says, I'm going to use a limit order to buy or sell, in this case sell, a pullback NG, these areas are created, and this is a great question. These areas are created when you open your software. It's using that 10 days back in your setting, and it's measuring every pivot, every swing for those 10 days back. It's using it in the time frame on the chart that you're looking at. It's using it in synthetic time frames. It's building time frames backwards, forwards. Do you guys remember, is anyone old enough to remember Yar's Revenge? It was an old Atari game. But NG, this is what every Fibonacci retracement, every projection, every alternate, it produces all of these lines. Your software sorts it, weighs it, and provides you those great red lines of resistance, of support. So a tick or two away, I'm going to consider that area reached. Does that help? Gary, I don't have NT8 set up. I don't have it opened. Gary, if you want to stick around after class today, I'll open it up and we'll go over it. But I don't even have it open for the classroom. Cool. So, yeah. But I'll be happy to do it like once we're done with the classroom or right at the end of class. Gary, I'll open up my NinjaTrader 8 and we'll go through and do it. I just don't have any reason to have it open during class. So rules 1 and 2 are met on the 13-2, right? What are we waiting for on the 5-1 so that we can identify our window of opportunity? Does anyone remember? CJ, new trader, everything says down. What direction do we want this market to go to decide our window of opportunity? We want a pullback. So I'm waiting for a reversal bar. I'm waiting for a green bar. I'm down with momentum. I've got nothing in the way, right? And I'm that crazy Yahoo. I want the market to go up. And there's my reversal bar. This reversal bar signals the beginning of a pullback. Is everybody comfortable with that? So let's do two things, guys. Let's use the rectangle from the bottom of the large triggers to the top. And see how they're one on top of the other? And now our window of opportunity is what? It's the lowest point of resistance, this mid-band, to the highest point of resistance. Those one-to-ones. Do you see it? Claire, absolutely. Guys, we'll do a little extracurricular after class. Just remind me, because I'm all about systems and routines. We'll take the last couple minutes of class and we'll focus on that NinjaTrader 8. So we've created a window of opportunity. It's inside of favorable large triggers. It's because we had a pullback. And it only came about because we have odds favorable momentum and no termination conditions. Is everybody with me right now? It's a mouthful on day one, isn't it? But I promise, if you start practicing this, it gets super easy. So this is my limit order. Let's put it at the bottom of that window of opportunity, a tick or two below that lowest point of resistance. Why? Because I have odds favorable momentum, right? Guys, don't trip over pennies and miss dollars. Here's my mid-band. I'm going to go about 2 ticks below it. I'm willing to accept that risk with all of the advantages. And guys, it's not going to be NinjaTrader 8 training. If you have a question and I can answer it, I'm going to answer it. I don't have a syllabus or anything like that. This is just, I want you guys to be comfortable with what you're doing. So it's not going to be a huge thing. Think of the questions you want answered. I'll do my best to answer them. So here's our potential entry. Is everybody with me? Odds favorable, no termination, reversal bar, window of opportunity inside of favorable large triggers. The market starts to come up. Does everybody see how the mid-band comes down as the market comes up? Quick pause real quick. Check it out, guys. Instructions. They're the same. New chart on Ninja 8, file new chart on Ninja 7. The software is exactly the same on 7 and 8, guys. If you can build a chart in 7, you can build a chart in 8. I'll build one for you. But since you have a little bit of time, try the instructions. Gary, I just showed it. It doesn't have NinjaTrader 8 ATM strategy, right? Oh, wait. Check it out, Gary. Here's a whole video. 4 minutes and 20 seconds. Watch the video. And then if you still have questions, let's do it, right? Let me put that link in the room for you. Guys, I promise, John Novak is so OCD about making sure you guys have everything that you need. There's your ATM video for NinjaTrader 8. It's chart building, everything. I'll cover all of it. I'm glad to. Absolutely no problem. But do you know what John Novak tells me when I say, John, how do I? Because I'm his brother. He said, go to the instructions, silly, and he sends me the link. But we'll still go through all of it, I promise, guys. But I'm not just going to give you a fish. I'm going to teach you to fish as well. Does everyone see how the mid-band works its way down as price comes back up? It's okay. After class, Gary, I promise. It's okay to move that limit order down a little bit. Market continues up. And there it is. You guys have entered a trade at 41.20.50. Give me a Y in the room if you're with me. There's your window of opportunity inside of favorable large triggers. Pretty cool, isn't it? Every day this happens. Gary, I promise, after class. Or if it's something that has to be done right now, Gary, go to tech. Jason will get you squared away in the moment. I'll talk about ATM strategies after class, I promise. Cross my heart. Pinky swear. So guys, we're in the trade, right? Cool. Where does our initial stop go? It's typically 12 to 14 ticks, so that puts us at 23.50, and that happens to be right here. Thank you for that clarity. There's my initial 12 tick stop. Does everybody see it? Outside of that window of opportunity. Guys, you have the advantage of momentum. You have the advantage of no termination conditions. You have the advantage of entering the market where it's likely to continue. Don't go, well, I better put it right here because I'm not willing to risk more than 1.5 points, and that's above the 1-to-1. 12 to 14 ticks is appropriate for an initial stop on a futures trade. If you're doing that very methodical management plan, if we're in at 20.50, that's your $100 target. Look how close that is. We'll make it the color of money. And then we're going to have our second target at 200, which puts us at 16.50. You guys with me so far? This is 100% from your example plan. Enter the trade at the lowest point of resistance inside of favorable large triggers. Initial stop where the market shouldn't go, typically 12 to 14 ticks outside of that window. First target at $100. Second target at 200. Oh man, it's going against you. Did you see that? Oh, and there's another up bar. Guys, you're staring at negative P&L right now. You're looking at -2 ticks, -3 ticks, right? This is where your brain is going to have you forget about every advantage, the advantage of momentum, the advantage of no termination conditions. And you're going to start to second guess yourself. And this is where you remind yourself that you just took a trade that typically wins 70 to 80% of the time, that you just took a trade with a market screaming momentum, nothing in the way from the area where it's likely to continue. And as it pulls up to the top of that window of opportunity, you get your reversal bar. Are you going to be able to sit through those 3 bars that go against you and believe in the advantages? Initially, maybe not. You're going to be staring at ticks. But if you do this enough, guys, if you study this enough, you're good. So now they've got the reversal bar. Watch this. My risk goes from 23.50 to 22.25. I just removed a lot of my risk, a couple over. Sun Tzu, has everyone ever heard of Sun Tzu? He wrote The Art of War. He said that you have to put yourself in the kill zone in order to be a successful warrior, paraphrasing. Your stop is the kill zone. It's outside of where the market shouldn't go. Here's our reversal bar. Let's see how it plays out, guys. Market goes down. See that tail? The market pulled all the way back up to 41.21. Do you know how many exits I see on that? Because people focus on ticks and not on advantages. And guys, there's your first target reached, $100. Look at the chart. So my super basic management plan says, when my first target is reached at $100, I'm going to move my stop to break even. So now I have $100 in the bank, and I have zero risk on a trade. Is everybody with me on that? Absolutely nothing bad can come of this trade. So one of two things are going to happen. Either my second target's going to get hit, or I'm going to make $100 and have a break-even trade. This is mechanical. Notice how there's no room for opinion or thought. There's no room to get antsy or anxious. It either does or it doesn't. It's mechanical, it's methodical. And congratulations, new trader, CJ, Ziba. You just made $300. And you're out of the trade. You allowed your chart reading to identify advantages, right? You allowed your chart reading to pick the area where the market was most likely to continue. And you kept a very mechanical, methodical approach to finding an entry. Odds favorable momentum. Guys, I don't have any indicators on there. I don't know if it's a termination condition or not. But even without it, can we identify the area of support inside of favorable large triggers? Assuming there's no termination condition there. Does everyone see it? In the moment. I do it pretty quick. I've taken 7,000 pictures. This is your only focus for 30 days, guys. Being able to identify that point where the market is likely to continue, being able to take that best of the best entry so that you can manage. Smalls above the large are wide. The yellow dots are the large line. For entries, new trader, I don't want you to give them rank. They're either inside of favorable large triggers or they are not. How easy is that? Don't overthink it. A negative 18 on divergence is no more powerful than a negative 73. You either have divergence or you do not. You either have odds favorable momentum or you do not. You either have a termination condition or you do not. And if you start thinking like that, allow it to be simple, it's going to take so much stress out. The only thing that I'm worried about right now is being able to identify an area of support inside of favorable large triggers. You with me on it? And if you're a brand new user, I want you to see that momentum. I want you to see that area. I don't want you to worry about anything else. I just want you to be able to identify the area where the market is likely to continue. Can you do that for 30 days? Say to yourself, I don't care if it wins or loses. I just want to find the entry. I don't care if I make money on simulator because it's just monopoly money. I just want to find the entry, because if all you focus on is finding the entry initially, as you grow, you're going to recognize that we're 50-50 at a divergence high, that we have an area with the potential to break, but the area hasn't broken yet. Eventually, you're going to recognize that there's a loss of momentum on an area that hasn't broken yet. You're going to be able to say to yourself that I'm coming from a pivot stop out that created a full reversal that gave me odds favorable. And you're going to start to piece all of the little bits together through chart reading to determine whether or not this is a trade that you want to take. And in the beginning, if you're using that example plan and you're keeping it super remedial, it says on 50-50 trades, no divergence will be present. So what does that mean? That means eventually, this isn't my trade. Or initially, but eventually it probably will be, because I'm going to see all of these different advantages that go in. So focus on your entries, and guys, take a picture of every entry. I hope a lot of them are wrong, because you're going to learn from mistakes. If there's no entries in the moment, go back and look for odds favorable momentum and tails and see what they look like. Is that area of resistance inside of favorable large triggers? What do you think, guys? Did that mid band fall within large triggers? Zeba? New trader? No. Sam? So, is this a high probability trend trade? It's not. It's really that simple. What if you took this entry and you showed me the picture and you said, you know what, Mark? This entry is not inside of favorable large triggers, but I went short. It's not my job to judge you on what you do. It's my job to help you read your indicators. You said, I went short, Mark, because I had a pivot stop out, a termination condition that created full reversal, that gave me odds favorable, that didn't have divergence. Everything said down, and I said, you know what, Mark, it was worth it to me to take a shot below those large triggers. That's okay, Zeba. And you and I'll talk about how it's not a rule number 3, but what it is great chart reading, right? It's looking at and deciding. Not everybody gets the bar fight analogy. A lot of people do. When I have a termination condition, when I have a termination condition, it creates a full reversal. When I have odds favorable momentum, when I'm with the trend, when my path is clearing, when there's nothing in the way, when everything says down, the smalls are below the large, everything says go, and I have one area 4 ticks below, all I'm doing is I'm saying that I have way more advantages as I grow as a chart reader. I'll get way more opportunity. Does that make sense, guys? But the key in the beginning, as you start your quest, just figure out where that best entry is going to be, right? If it doesn't get there, maybe it's not an entry. What are we seeing now? Now we're seeing one loss of momentum. Here's a second loss of momentum. Small triggers are still outside. You'll begin to recognize patterns that say when 2 divergences print, price loves to take out that previous pivot. If price takes out that previous pivot, it happens to be right at a mid-band inside of favorable large triggers, coming from a termination condition with odds favorable momentum, maybe not necessarily a high probability trend trade, right? Because I have an area with the potential to break that hasn't broken, and I have 2 losses of momentum. It's not a perfect trade, but I can go through it in my head and I can say, do I have more advantages than disadvantages? Is this a trade that I'm willing to take based on my chart reading? And that's where your plan begins to evolve and go through. But it all starts with keeping it simple, guys. Rob A, here's an entry point that's not filled. Let's see what you got, bud. I love it. You know what one of the worst things is when every rule is met and it just doesn't give you a fill. And you have to sit on your hands and accept that you don't control the market. Rob, it's trying to load. It does happen. Let me see if I can make this happen real quick. All right, Rob, good top or bottom? They're trying to roll, but they haven't rolled, right? Odds favorable. My large triggers aren't green yet. Technically not yet. No termination conditions. We've reached 1-to-1s. Every trigger line is below. Area for entry inside of favorable large triggers. Well, I don't have favorable large triggers, so I can't have an entry. So Rob, what you're looking at here, and once again, is a great read, is a beautiful termination condition potentially that may create a full reversal, that may give odds favorable, that may put an area inside, right? But it hasn't happened yet. New trader, absolutely. And that's it. Rob, wait for the rules to be met. And there's a big difference between trading what you think may happen, and what has happened. And this is one of my favorite pictures, and what you hope. Amen. And this is kind of the same scenario going the other way. So coming into resistance, right? I've got a great area with the potential to turn the market. I think resistance will hold. And if I get in at that resistance area, I get stopped out 3 or 4 times, trying over and over. But if I let the triggers roll, if I let the rules get met, now resistance has held. Do you see the difference? I think resistance will hold. I'm fighting triggers. I'm fighting momentum. Resistance has held. Everything's in favor of the short. Guys, did you notice that it's the exact same price? This happens more often than you'd expect. And it's being patient, waiting for that roll, getting on the right side of the fight. That's gonna change your world a little bit. So Rob, great read, great understanding of what has the potential to happen. Let it happen. Wait for that advantage rather than hoping that that advantage presents itself. Great picture. And that was crude oil, right? Look at that, guys. 3 divergences in the same location, and it pushes right past our window of opportunity. Chart reading. So Rob, we think it's going to be a good bottom. Triggers roll. Now it is a bottom. I think it might, and now it is. And this one just didn't give you an opportunity. New trader, 1-to-1s. I'm going to give you 2 versions, new trader. I'm going to talk about what it means. And I'm going to go back into my default. I'm not a programmer, nor am I a Fibonacci expert, but I know how to read them to give me an advantage. So 1-to-1s are nothing more than a 100% Fibonacci alternate. It means that when price goes from A to B, and then it creates a lower C, all 1-to-1s is the distance from A to B. These yellow dots will print where D has the potential to be. It's a 100% Fibonacci alternate. Simple enough, right? Let me give you the picture. And see, to me, new trader, might as well be Chinese. I don't do well with numbers when you add in letters. It's just the way my brain works. So let's give you the other side of it. I'm going to give you the Mark Novak version of it. And I'll use this picture right here because I think this sums it up perfectly. What do one-to-ones mean for us? If price is trading to the one-to-ones from above, one-to-ones will act as support. If price is trading to one-to-ones from below, one-to-ones will act as resistance. Because it's a Fibonacci alternate, these one-to-ones get the exact same credit that the Fibonacci's that are red and blue get. These are just in the moment. So price trades down to one-to-ones, it acts as support. Price trades up to one-to-ones, they act as resistance. Does that make sense, new trader? That's taking the technical and turning it into the English Lit major's version that he understands. So hopefully we kind of covered the gamut there. It's a fib, but it's a fib that prints in the moment based on a calculation. Indu, the yellow ones are large swings like you just saw. And then the purple ones that you're looking at, man, I had my picture today. Let me find it real quick. The purple ones on your chart are from smaller swings on smaller time frames. That's all it is. If there's a line on my chart, I'm respecting it. One's a large swing, one's a small swing. You're welcome. And then guys, for you new users, let me put this one in the room too, because there's a lot of you that want to know more than just how to do it. You want to know what it is. What are your fibs? When you're looking at your 13-2 chart, the fibs that extend all the way indefinitely are from the 13-2 chart. Your very skinny fibs that don't go all the way to the end are the fibs on your 5-1 chart, and your really fat fibs are on your 21-3 chart. Termination conditions are the same no matter what they are, whether they're skinny little ones from the 5-1s or fat ones from the 21s. If price reaches them and triggers don't break through, they have my respect. And these are great questions, guys. Do you have to know how they come to be to use them? Absolutely not, but some people like to know. Another one of those looks, right? Support to resistance, resistance, back down, one-to-ones, no trigger lines through, not messing with them. Doesn't this look a lot like this consolidation over here? That looks a lot like the consolidation over here. And if we're patient and we wait, opportunities present themselves. It's just a matter of waiting for the clear path. Yep, Paul, I was in a rant. I got you right now. Paul put, Mark, I was lucky enough to trade into news this morning and it moved so fast that it blew past where your stop would have been when your order was filled. Is that why my stop didn't come into play? Because it moved so fast to fill and then past my stop? That's it. Paul, there was so much volatility and violence in the market right there that you dodged a 50-millimeter bullet. And they didn't have somebody on the other side to fill your order. Doesn't happen very often. During news, it can. Typically, what happens is it blows through, yeah, but you get slipped, right? So when you're trading into news and the market acts erratically, if my stop for a short trade is right here, all that volatility hits where I think I'm getting out at 77.60, it may not fill until 77.80. because the market can move so fast. D, it doesn't matter what it was. The only thing that really matters is that we knew it was coming. It was core retail sales, Empire State Manufacturing. But when I see these red boxes, I know that there's an awful lot going on, and that guys that react to news may react. There's a link to that one. I check this every morning before I start. You had to close it out, Paul? Termination to termination. And now we look to be continuing back down. How are we doing today? It's 11:25. I don't typically make it this far into the day without taking a second break. Are you guys, is it becoming a little more clear? If you're in your first couple days, guys, it's like drinking from a fire hose on the first couple days. I know that it is because I've been there. I've drank from that same fire hose. But we go through this every day. We go through talking about rules. We're going to go through talking about the advantages that your rules provide. Going to talk about putting yourself in the position to recognize when you have odds favorable momentum, to recognize when the market may push lower through divergence. Going to teach you to recognize termination conditions, odds favorable momentum, and then putting it all together to be able to enter the market where it's likely to continue. Guys, you're on a marathon. This isn't a sprint. The name of the spreadsheet is Nexgen 90 Day, right? If I go to the tutorial page, I can't find my mouse. Hold on. There it is. If I open this up and I go to the tutorial page and I look at that spreadsheet, guys, Nexgen 90-day training worksheet. 30 days looking for the best of the best entries, those high probability entries, taking 1 million pictures, presenting 1 million pictures. The next 30 days, maybe adding that 50-50 trade, but really focusing on your absolute best of the best entries. And then guys, the rest of your life, working on your management, working on your trading plan, building it into something that suits you. Nexgen will give you the indicators. Well, we'll sell you the indicators. Provide you all the training that you need, right? Just get the work done. Zeba, are you still with me in here? Look at how those trigger lines spread out. Do you see it? I want you guys to remember this look. When they begin to spread like this, you don't have an advantage anymore. When they're one on top of the other, if we had gotten a pullback to this right here, I'd take that trade all day long. But when they start spreading out, when those divergences start printing, when things start going the wrong direction, you just can identify when you're losing the advantage. Still odds favorable, right? 3 divergences said it may push lower. It's still going up based on the 13.2. Rules 1 and 2 are met. And guys, this is, let's see if it does it today. Let's see if after it doesn't go from this spot, everything rolls, all triggers agree. Let's see if it stabs back to those small triggers. Let's see if it stabs back to that mid-band. Potential continuation opportunity if the rules are still met on the 13.2. This is another one of those chart reading, but remember, we're on a 50-50. But you'll begin to start looking for ways as you grow. 13.2 set up, the 5.1 said it may push lower. 13.2 still suggests more up. Odds favorable still suggests we're getting to the next area. So if I took this trade and it didn't work out, or I was patient on this trade and it didn't work out, let it do what it's going to do. Let the trigger lines roll. And this is a second chance. And sure enough, it pulled right back to those small triggers that happened to be right at a mid-band. That momentum on the 13.2 is pushing it up. Now we're back into expectations. And once again, guys, just like what I think will happen versus what does happen, those entry prices are damn near at the same spot. This is not a high probability trend trade. This is a trade that comes about later in life when you learn to read your indicators, recognize advantages, and put yourself in a position to understand expectations through momentum. Whoops, what just happened there? Do you see it? How did I know that was going to happen? Because I've taken 7,000 pictures and have asked twice as many questions. It wasn't guaranteed to happen, but it was probable. Paul, you and I spoke about this one, didn't we? And the 13.2 suggested that it was likely to continue with odds favorable momentum. Isn't that amazing? To go from no trade to learning to read your charts to the point to where you can add something else to it. Now here's the difference. A lot of people are going to mess up this lesson because maybe they won't have odds favorable momentum, because maybe there will be a termination condition. Focus on the best of the best, guys, and understand that you're going to grow every day exponentially. And it went right to the target, didn't it? Straight from 35 to 40, 5 points, easy peasy. Lemon squeezy, guys. That was it, Paul. It's just a trend trade that didn't work out. So rather than saying, and here's what people do a lot, and I want you to see this. You see them better as sells? You'll get that. Everybody's different. Guys, if this was your entry and it didn't work, didn't get there, people will take it again, right? You take it, 3 divergences, and you're like, oh, it should still go. And then you buy that mid-band again, and then you buy that 1-to-1, and you're like, ugh. And then you buy the 1-to-1 again as it pulls back, and you're like, ugh. And what you do is you end up with 3 to 4 losers. Based on opinion, right? It should go up. But then all of your trigger lines agree. You let all of this nonsense happen. Everything says up, everything has momentum, everything rolls, everything's green. And then you look for that little second chance, guys. This is a look that'll eliminate 2 to 3 losers a day. And if those trigger lines never roll, then you never get into the trade. Odds favorable, 50-50. John used a different chart, waited for a signal, almost the same entry, right? John used a market flow signal on a third chart. But he let the nonsense happen, didn't he? He let the shenanigans work their way out, and then he waited for confirmation. Shenanigans cost money. That's going on a t-shirt. And he got in about a point better. Either entry's great, but notice how everything started with the 13.2. Everything started with odds favorable momentum. Everything started with being able to see that next Fibonacci area. Nice trading, John. And that's just an example of how chart reading is going to take you where you want to be. Oh, see, the only problem with John posting things. Ziba, an HVA line is a high volume area line. After you're so good at identifying a high probability trend trade, no, don't be sorry. After you are so good at identifying a high probability trend trade, well, you may find yourself using a range chart. And a range chart is just another way to look at what the market's telling you. And it's a confirmation tool, first and foremost. But the way John was using it here is these high volume areas, these little areas in between. This is where there was like this big consolidation of buyers, right? Each market flow bar has this high volume area. You'll see it on the bar. This is where the highest concentration was. Absolutely, CJ. John Novak studies every day, market replays every day. Sam, you can. You just need his experience, right? John's trades aren't super. Yeah, Zeba, just ignore that. Ignore it, ignore it, ignore it, please. He's using this line on the bar as an area of support. This is advanced. This is where you're going, guys. And this is the way he's using this is he takes a perfect high probability trend trade and he lets this help him with stop placement where the market shouldn't go below. So initially your range chart will be a confirmation tool. But it's a confirmation tool of a rules met scenario. Price reached an area of resistance. How many trigger lines made it through that resistance, guys? Zero. So what do we call that? Which rule hasn't been met for a long trade, even with odds favorable momentum? We had the advantage of momentum, right? Rule number 1 was met. Rule 2, perfect, new trader. We didn't have the advantage of a clear path. And look what happened. If you willingly forfeit your advantage of a clear path, you have to be prepared for that midband not to hold, right? For those of you that have been trading for a while, don't you wish you had that sometimes in your previous trading? Knowing exactly where the market was likely to go based on momentum so that you could take profits. Knowing exactly where the market's likely to stop so you don't take that next trade into it. And then understanding exactly where the market is likely to continue so that you can enter the market at the absolute best of the best point. It's almost a cheat code. I'm not sure what the average age is in here, guys. I'm 50. And when I was about 10, Atari 2600 came out with Pac-Man, maybe 11 or 12. And there was a code on Atari's version of Pac-Man that if you followed the code, you never died. That was Contra. But if you followed that code, you never died, right? That was your advantage. Guys, your code as a grown-up in the day trading world is understanding. If you're less than 40, you don't understand, exactly. And then Paul went to the Super Nintendo because we didn't have that. I was already chasing girls by that point. You learn these codes so that you can have an advantage, so that you can win more than you lose, right? I want you to think about it the same way. The advantages provided by your rules are like your cheat code. But Paul, if you go up, down, left, right, the cheat code doesn't work. If you go left instead of right, the cheat code doesn't work. If you trade into a termination condition instead of letting it break, the cheat code doesn't work. If you trade with anything can happen triggers instead of odds favorable, well then your high probability trend trade cheat code doesn't work. Does that make sense? Maybe that analogy helps some of you guys. Your success initially, Claire, I am a big melon full of useless information, things that I can't forget. I keep trying, but I remember all that from my kids. Patterns stick in my head. Systems and routines were where I excelled in my professional job before I chose to become a day trader. All I did was train managers and train staff and create systems and routines for making it so that people could do tasks easier. Just like this class, trying to simplify it so you guys can understand these concepts as they are a little more basic. Taking what has the potential to be complicated, Fibonacci, algorithms, all that stuff that I don't understand, and breaking it down to a very basic. If my rules are met, I pull the trigger. If my rules aren't met, I sit on my hands and wait for that advantage. And guys, it takes study for you to begin to recognize the advantages, and it takes that repetition. Most of you will be getting entries down. D, new trader, CJ, you guys are going to understand entries within a week. You're going to start seeing entries everywhere. You're like, oh, there's an area, there's an area. It's inside favorable large triggers. Go, 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 go. And you're going to go full-blown rock star on it. And while you're doing that, you're going to begin to understand how to read your indicators. So you guys are going to go, I'm just going to tell you your path right now so nobody's surprised. You're going to go from checklist, guys, and you're going to be like, oh my gosh, I'm so successful because I am using this checklist. I understand my entries. This is amazing. I'm killing it. And then you're going to learn to read your indicators, and you're going to go from trading what works to trading what you see. What you interpret the indicators are telling you. Has anyone else done this? Is it just me? I think we all do, right? Everybody's done it. When I was training managers, and this isn't very PC, this is what we lovingly refer to as the 30-day stupid. For 30 days, every one of my brand new managers, and they sent them to me from all over the country, were the most brilliant people in the world because they followed a checklist. And then they decided that they were too smart for a checklist, and that's where mistakes happened. And you see it. You've probably seen it in your own professional career. Embrace the checklist until the checklist is so second nature that it feels wrong to go against it. And then you'll add to it. You'll add different looks. You'll add different trades. You'll add different management scenarios. You'll add different entries. You'll add second chance entries like we talked about with that little continuation. But in the beginning, if all you focus on is that checklist, you have the best chance of success. You guys with me? All good? All right, Ninja Trader 8 people. Claire, who else was with me? Steven. New Trader, you say, is the entry chance coming? Can I counter? Are the rules met? And that's what I ask myself every time. So let's go through it together, New Trader. Let's take the picture. On my 13.2, you're going to love this because this is about to show you just how easy it is. Do I have odds favorable momentum on this most current bar? Do I have small triggers above the large triggers, space between the two? Zeba, have an awesome rest of your day. I'll see you tomorrow in here. Not yet, right? So New Trader, the entry chance may be coming, but not yet. Price reach resistance. Did any trigger lines break all the way through resistance? Not yet, right? Isn't that easy? So what does that mean? It means rules not met. Have to wait. So there may be an entrance coming. And this is where, when my rules aren't met, I sit on my hands and do nothing. And then New Trader, I start playing if then. If price gets above resistance and it gives me odds favorable momentum and no termination conditions, then I'll look for areas of support inside of favorable large triggers. Or if this resistance decides to hold and my trigger lines roll and I get odds favorable momentum in a downtrend, then I'll look for areas of resistance inside. In the meantime, it's just a game of waiting. And that's the hardest part. It really is. And I took the picture. I'll show it one more time. Guys, the hardest part of day trading is sitting on your hands and doing nothing until your rules are met. When your charts say do nothing, do nothing. Safia, have a great one. Thank you for being here. Did you look at that thing on the CME ticks? If you have questions about it, feel free to bring them in. Doing nothing should be the easiest, but it's really the most difficult. All right, guys, here's NinjaTrader 8. This is how we're going to finish class today. First thing I have to do is I have to connect, right? So what did you guys want to do? I got this, John. I'll make a chart real quick. So here's our chart building. Someone was asking, how do I build a chart? New chart, right? What's our instrument? Let's make it the S&P. 323 S&P. I need a template, right? So let's build a 5-1 chart. 5-1 dynamic Renko over here on the S&P. Price based on last, Nexgen dynamic Renko. My body size is 5. New bar at 1. We're building a 5-1 chart. Tick replay. Don't want to click that one. Days to load, 10 days back. And then, guys, it's that simple. I click OK. And where is it building that chart? Over on a different screen. And now it's going to load in this chart. Just like NinjaTrader 7, guys. Virtually identical. So that's going to take a second. It's going to do those calculations. And I want to say it one more time. The coding for NinjaTrader 7 and NinjaTrader 8 are exactly the same. Rob, you don't have to. All right, so now we have our chart, right? Notice how there's only one large trigger here. If you want that synthetic trigger on there, you can go to Data Series and click Tick Replay. I'll hit Apply and OK, and it's going to recalculate. And guys, this Tick Replay, adding the synthetics onto a chart, is what typically makes it a little less stable. And it's not the Nexgen software that's less stable. It's NinjaTrader 8 has challenges with it. So if you're one of my Apex traders and you have to use NinjaTrader 8, guys, you can actually create just your 5-1 entry chart and do your analysis on 7. And there's the non-tick replay version for the template. John just built it for you. And once this comes up, what's the next one? Gary, we're going to build an ATM strategy, right? Claire, did you have any questions? So I've got my chart. Chart Trader. Right here, right? Chart Trader opens it up. I can see that I'm on Sim. I've got nothing. Okay, cool. So ATM strategy. This is your stops and targets. I'm going to hit the down bar. I'm going to go to my settings, and it's going to let me edit it. I have to pick one of them. So when I click edit, it's going to bring up my parameters. Order quantity is 2. Gary, you want 4, right? I can bump that up to 4. I can add more targets. So now I have 4 targets. If I only wanted 3, I'd click remove. It'll take one of the targets off. Quantity 1, quantity 1, quantity 1, quantity 1. Stop loss. It's starting at 10,000. That feels a little excessive. 12 to 14 ticks, right? That should be consistent across the board. And then profit targets. This is the S&P. Let's say, whoops. I froze up just a little bit here. All right, my Ninja Trader's hemorrhaging a little bit. Well then, Gary, then you want 3 targets, right? 12, 12, 12, profit targets in, save as template. Hit save as template, and it's going to ask you to name it. If you just click OK, it's not going to save it, Gary. So rather than having to right click, and I froze up here. Click save as template, and once you click save as template, there we go. So we'll remove it. Profit target $100 on the first, $200 on the second, and we'll just put that third one out there for the runner. Save as template. What do I want to call it? We'll call it Gary's plan. Click save. Click OK. And now it's right here in the drop down. Gary's plan. Does that work? Gary, does that help? So if you're doing test versions, practicing different stuff, you can create, guys, you can create 100 different management scenarios. And I'm just going to get rid of that one because I don't need it. And get this off the screen because you guys don't need that. Sam, let's see what you did, my friend. All right, Sam, you say 50-50. Both fast and slow triggers are pointing up. Reversal pivot, you get in at the area. What would Cam do here? I don't know. Cam would go get a beer because he's in sales. But since I'm in education, let me help you out. So Sam, are you ready? Rule number 1 says strong trigger lines. So let's go to the manual real quick. You guys know you can go back and look at this. So Sam, rule number 1 says that the small trigger line should be above the large trigger lines, that the large trigger line should be wide, and there should be space between the two. Are you with me on that one? This is your best of the best look for a high probability trend trade. Your small trigger lines have worked inside of the large trigger lines already, which means that what we're really looking at is kind of an anything can happen scenario. Does that make sense? Cool. So we forfeited the advantage of momentum, but it's a good read. The market's going up. And then as we get to this key area, your large triggers haven't made it through the area yet. So I have one of the 50-50s, you called it. Trigger lines haven't gone through. But when we have a 50-50, Sam, that odds favorable momentum helps a lot. You waited for the pullback. I love it. Rule number 3, and you killed it on the direction, a little light on the momentum. Rule number 3, remember that we're waiting for that pullback, but one of the things that makes it so successful, one of the reasons that we get that advantage is that we're trading from those areas inside of favorable large triggers. So see how the areas, that mid band, they're inside of the favorable. So when we look at yours, Sam, the direction is great. Absolutely. You're below those areas, below those large triggers. So we didn't have the momentum and we didn't have an area inside, but I've got to tell you, Sam, you're on the right path. The market's going up. Your trigger lines are going up. Everything is saying up. You just didn't get that best of the best entry and you didn't quite have that momentum. You're welcome, Gary. We got you. But this is perfect. Sam, this is everything that you should be doing, especially as a new user. And then you can take a minute and you can go back and I want you to start comparing your entries to the perfect entry, right? I want you to go to your spreadsheet and I want you to go to the Nexgen user trades and I want you to compare the momentum on your chart to the momentum on these charts where you know that it's absolutely perfect. And that's what gets you to that next level. Sam, you're exactly where you need to be. And the fact that you took that picture, that you posted that picture, and you took the feedback for it, I'm going to get you exactly where you need to be if you promise to keep studying and focusing on those rules. Steven, have a good one. Did you see me build the chart? Did that work for you? I built one in NinjaTrader 8. Yep, okay, cool. Wanted to make sure. So guys, that's it for me today. Y'all did amazing. Great questions. New users, thank you so much for being here. You guys absolutely tore it up. Your questions were amazing. Your input was amazing. And it makes this class better every time you guys do that. If you're brand new, CJ, new trader, I know that it's a little overwhelming in the beginning. Remember, right now, you're not grading the software on whether or not you can be successful with it in a week. You're grading Nexgen right now. Is the education in place? Does the software work? The answers are yes, absolutely. And then we just work on that relationship where you and I hang out for the next 3, 6, 9, 12 months, whatever it takes, for you to understand everything that you need to understand, for you to be able to read your indicators, and for you to formulate a plan that gives you more advantages than disadvantages. And that's exactly what we do every time. So almost a year. I love it. Guys, that's it for me. I'm going to hit the big old mute button and stop sharing my screen. I'll be back tomorrow morning at 9 a.m. Eastern, and we're going to do it again. If you market replay this afternoon, take your pictures. Bring them to class tomorrow. We'll take a look at them. Take care, everybody. Thank you for being here.